Afternoon, it's Friday, September 12th. I'm going to get right into some live stock trading. We have so much going on. The New York Stock Exchange, pretty much everything's hitting all-time highs right now. It's crazy. It is so easy to make money right now. That's probably my biggest concern. I don't think I can remember a time in my lifetime where there's so many trades that I'm thinking about doing, and I just don't have enough cash to do it. If you're new to trading, I encourage you to like and subscribe, follow along, learn how I'm trading. It could benefit you long term. Ask questions. That's the biggest thing. So let's get right into it. We are expecting a Fed interest rate cut in the United States. It's going to be the first one in over a year. And it's at a time where inflation is not solved. That is the issue. But the job market is starting to fall apart, and we want to avoid a recession. Now, we are at a crossroads in America right now, and President Trump was trying to get in there and raise some cash with the tariffs, and I see what he's trying to do. He's trying to hyper-accelerate the economy with the tax cuts, but it's a weird mix. We're at the verge of the federal court deciding whether or not Trump tariffs are legal or not. And there's some other avenues you could probably pursue, but it's going to create a lot of drama going forward. So any stock tip, I don't want to even call them tips because I'm not a professional, but anything I'm saying now, you got to keep that aware in the back of your mind. That is not the only risk. There is continuing resolution funds for the federal government that get approved annually, and it's basically raising the budget to pay federal workers. I dealt with a lot of that when I was active duty military. A lot of the contractors, when this didn't get approved, would go peace out and go home. And then they would have a couple weeks of vacation off. Eventually, we would approve that debt ceiling limit raise. And then they'd come back to work. Back paid. So we're still going to pay them, but there's going to be drama with that. So there is some drama going forward. But typically when we cut interest rate, things go up. Assets go up. So the first thing is you don't have assets, you need to start collecting them. It's not too late, and you can start small, and that's how I did it 30 plus years ago. Let me get into my trades. First up, I am wandering the chat window. I'm hoping everything is working all right. I haven't done live streams in a while, so it's been over a week. It went smooth last time. I'm hoping it goes smooth this time. So here are my interest rate cut trades, and I'm actually going to do these right now live. This, what can I call it? This spreadsheet that I'm going to lay these trades out, these are real trades. I'm doing them live. I'm showing you what I'm doing. I'm not going to tell you something that I wouldn't do myself. Full disclosure, this is how I'm actually trading. So again, don't do my trades. Learn from my trades and why I'm doing the trades I'm doing, and that will help generate ideas for you, hopefully, and make yourself profitable. So first thing, this is actually new for me. I've never traded on this. This was something that came up on CNBC yesterday, and I liked the suggestion. It's RKT. So let me pull this up. RKT quote. This is Rocket Mortgage. Okay, let's zoom out about a year to date. So we're late to this trade. I don't think we're late to the party, but it's doubled in the last year. And I believe that's in anticipation of the eventual Fed rate cuts. So what ends up happening is when the Fed cuts rates, there's refinancing. I moved at a time where rates weren't sub 3. I'm in the 6 range, and there'll be a point where it makes sense for me personally to refinance the home that I'm sitting in right now. Guess who benefits from that? Rocket Mortgage. They have streamlined everything. They are putting a lot of these small guys out of business as far as banks. It's kind of interesting. I did not use Rocket Mortgage, but I know how popular they are. They make it completely easy. Essentially dummy proof for the next generation. So I see them benefiting very well. So now what price to pay? It's at $21.36. I don't know. This is a very, very small trade for me. Let me pull up I trade with the Thinkorswim platform, which is a byproduct of Ameritrade that since got swallowed up by Schwab. But it doesn't really matter if you're on Robinhood or E-Trade or Fidelity. It's the same trade, so I'm just going to talk you through it. Okay, so let me get a real-time quote for Rocket Mortgage. Ticker symbol RKT. Right now it's trading 21.33, so pretty close to what it's saying on that. This is a real-time quote. Okay, so how would I trade this? Well, I could buy a couple shares and just ride it out, and as the Fed starts cutting rates, because they're going to have to save the job market, the refi boom is going to kick into high gear, and I would anticipate, again, they're going to go up. So I could just buy the shares, but because I'm an option trader, my mind doesn't think like that, and I normally trade in 100 share blocks. So in this example, it would be $2,100 or so that would need to be obligated to do what I'm going to do right now. So I'm looking at the option table, and let's see, I'm going to go out like 2 weeks. First, let me make sure I'm on the right account. Hang on. Okay, yes, I have money to do this trade in this account. Okay, so RKT is the ticker. And I'm going to pull up the option table on Yahoo and kind of show you what I'm doing. Over here, RKT quote Yahoo. And again, most of your Robinhood traders, they're not doing this because they don't understand options, and that's a damn shame because it could be so profitable. What I'm looking for up here is the option table. So let me find it. It's been a while. So here on the left here, options. And this is, we're going to do something that's about 2 weeks out. So I'm looking at this option table. So what this is telling you is the expiration date is September 26th, 2025, a couple weeks out. And then what I'm looking to do is to sell a put against it, which obligates me to buy shares in Rocket Mortgage. And so the closer you get to the actual trading price, the more money you're going to get for this trade. And I don't want calls, I actually want puts. So let me see if I can change this. Puts. So when you sell a put, you're obligating yourself to buy shares in said company. So at $21 a share, which is only 36 cents lower, 2 weeks out, I'm getting about, let's just say $1.20 a share. So options are in 100 share blocks. So if I sell to open one put, I will get approximately $1.21 a share, or I'm sorry, $1.20 a share, $1.19 a share. You multiply that by 100, you're at about $120. So let me go ahead and set this trade up. And I keep looking this way because I'm seeing if anybody's tuning in. There could be questions. Okay, let's see, make sure I'm on the right option table. Rocket Mortgage, September 26th. $21 a share. Boom. So funny enough, my real-time quotes aren't anywhere near this. I'm seeing 95 cents to $1. Interesting. Now that's probably because Yahoo is not giving real-time quotes right here. That's okay. I'm going to go ahead and do it anyway. All right. So I'm setting this up. Sell to open for the 26 September 2025 option chain. I'm selling a put. I'm doing one. I'm going to say 98 cents a share. Boom. And we'll see if we get a noise. Okay, that ding means the trade went through. I'm going to go ahead and update my spreadsheet. First trade completed. So again, I sold a put. I only did one. The strike is $21 a share. The cash required will be $2,100. I need that in my account to be covered in case I get assigned and have to buy 100 shares of Rocket Mortgage. And I got $98 a share less a small commission, about 50-cent commission. So first trade's in. So again, I will wait. we'll see. Oh, and the expiration, that's a big one. So we're at 9/26/25. So the way this goes, if Rocket Mortgage continues to go up, I could close this out at a price less than the 98 cents a share and make the difference. I could just wait till September 26th and let this expire. If it trades at a price less than $21 a share during that time, there's a chance I could get assigned before this expiration, but 99% of the time, we wait till expiration to see what happens. And then I might have to cough up $2,100 that's already in the account to cover this trade. So again, small man's trade. But I think it's a solid one on a percentage basis for something that's only a couple weeks out. I'm making essentially 5%. That's not bad. Instead of waiting more about a year in a normal savings account, making less than that. This is how I got started in options early. I plussed everything up, put cash in the account, started selling puts. I take that money, which actually was deposited right now, and then I reinvested, a redeployment. Again, small man trade, but we got to start somewhere. Next thing, Home Depot. Home Depot, wow. Home Depot is going to benefit from the interest rate cut. I don't think people realize how much they're going to benefit. Now, Jim Cramer on CNBC, he was foot stomping Home Depot. They've been a long time holder of it, even though it's been kind of sluggish for a while. Let me pull up a chart. Now, the trade I'm going to show you is not a small man trade. Okay, so it's been recovering. Let me look at a 5-year. All right, it's been kind of a jaggedy up and down momentum there, but here's what I will say. With an interest rate cut, what's going to happen? Well, we're going to refi houses. People are still kind of stuck in their houses. They are remodeling their houses. They're taking care of their houses. They're putting money back into their homes because they're kind of locked in with these low interest rates of sub 3. So with interest rate cuts, there's going to be home mortgage refinancing. They're going to take HELOCs out, take that money, reinvest it into their homes. That's all going to benefit Home Depot. Now, you could buy a few shares, hold it, see what it does. As you can see by the chart, it's up and down. I hate to do this trade at a high, but you know what? With the interest rate cuts the next year, I see them doing quite well. So I'm going to go ahead and, in my case, sell a put. I'm pulling up the option table again. And, for this, I'm going to go out to January because this story is going to take a bit to materialize. When they do Fed cuts on the interest rates, it doesn't necessarily mean that the home mortgage interest rates are going to go down immediately. There's kind of a lag. It has to do with the treasuries. It doesn't happen instantaneous, but the expectation is home rates are going down. They were in the 8s, they were in the 7s, now they're in the 6s, and they should get down into the 5s. And as that happens, Home Depot's benefiting, and that's what you're seeing since, this chart here. So I'm going to obligate myself to buy, I don't know. Let's say I'm just looking at the option table here. I'm going to go to 390. And to do this trade, I'm going to get in the low $800 range. So at 390 is the strike price. 390. 390. So the amount required for this trade is $39,000. I'm going to make $800 and probably about $20, but this is not completed yet because we'll see what gets executed. I'm going to do one, and again, sold put. All right, so let me set this up. I clicked on it. Did it do anything? It did not. 390. Okay, I'm going to start out higher. I'm doing limit orders. 800, I'm going to say in 25. Sell to open, I would get $825 if this goes through. Let's see what happens. I don't think it's going to. No, it did. All right, it did go through. So limit orders helped me out. So I got an extra $5 there. Boom. Again, that got deposited right now. And so far, I made $923. Now, I realize most people aren't going to obligate $39,000 to Home Depot. I get that, right? Most people don't start there. They don't have that type of capital to back a trade up like that. Now, I'm quite confident that I'm not going to get assigned the shares of Home Depot. I'm going to keep the $825, and in this case, I'm going to have to wait till up to January. Now, the beauty behind this trade is I won't pay taxes this year. If I hold it through duration, that'll be a tax obligation for next year, but that's okay. All right. It's there. It's waiting. Now, on a smaller account, I'm thinking to say my retirement account, my Roth, I might just pick up a couple shares of Home Depot, maybe $1,000 worth, 2-3 shares, and just let it sit there and kind of forget about it. You know, Home Depot does pay a dividend. And that dividend is, well, I'm trying to look for it here. Okay, so for each share of Home Depot annually, you get about $9.20, which equates to about a 2% dividend. So they repay you and you can reinvest that or keep that. So now I don't collect that dividend unless I get assigned in this option world. So as a non-shareholder right now of Home Depot, I don't get the dividend. But if I get assigned this, I'll just turn around and sell a higher covered call on it and then wait it out and collect the dividend. But again, in my mind, this is a low risk trade, but you need quite a bit of money to execute it unless you're just buying the shares flat out, right? Next up, here's a little known company. It's actually not a company. Let me pull it up. This is a REIT. A lot of people don't know what REITs are, but I'll explain it to you in a minute. Let's see, search for DLR. Okay, REITs are very interesting to me. REITs should do well, I would think, in a interest rate cutting environment. So let me explain what a REIT is. A REIT is required to pay a certain amount of their profits in a dividend annually. I believe it's 90%, but do not quote me on that. But it's a very high percentage of the profits. And they have to meet those requirements to be classified as a REIT. And so there's a lot of them out there, but what they do, like say a property developer, that takes an incredible amount of capital to build a structure, a skyscraper, a business, homes. There's self-storage. There's REITs for just about everything. And some of them have healthier balance sheets than others. But I like this one, and I'll say why here. Let me pull up what they actually do. Profile. Okay, so they own, acquire, develop, and operate data centers throughout the operating partner subsidiary Digital Realty Trust. So a data center is essentially a collection of computers that are stood up in a given city, normally around power plants with cheap power. And it's kind of the underpinnings of what they call the cloud. So you have these data centers all over the place. My thesis on DLR, AI is going to drive the need for a lot more data centers, a lot more GPUs, and these guys, through this REIT, set these up, and they know what they're doing, right? They keep expanding, they keep adding more of them, and as they do that, obviously there is profits that are rolled in, and let's take a look at those. Let me go to, analysis. So this is kind of what I do for any stock trade that I'm looking at. I'm looking at, okay, are they growing? Well, yes, sales growth is growing quarter after quarter. Okay, next year it's about 11% is what they're expecting. 2026 growth. I think that's low, and the only reason I say that is because of AI. let's see. So current year, they're expected to make about, I don't know, sub threes next year. I don't know. That's interesting. They look on the low side. So here's the problem. There's only 3 people covering this. And that's a huge issue. You're not going to get accurate readings. Mostly like a Yahoo or a, I don't know, Google or a Netflix, they're going to have probably 30 analysts, 36 analysts covering, their projected earnings and what they think they're going to get. So you get a more dialed in look at what the growth potential is. You only have 3 people covering this. So I'm thinking, it's going to be kind of crazy. But look at the actual earnings. Okay, green means good. They beat by 3 cents, 14 cents, 5 cents. I have a feeling the next year or 2, you're going to have beats that are going to blow some people's minds for this type of company. So again, I feel very comfortable trading this. But again, you have to know your own risk tolerance, what you're trying to do. There is a dividend involved in this. And let me go back to the dividend, see what that looks like. Here it is. Okay, so the dividend earnings per share is in the higher 3s. Dividend is 2.79%. So actually that's kind of low for a REIT, but I'm okay with that because this is a REIT that I think is going to grow. So as they grow and make more money, then they can pay more in dividends. And the reason is they have to pay more in dividends because it's required by law to be classified as a REIT. So in any event, that's my case for that company. Let's do the trade. Boom. So again, pulling up the option table. And if you see the theme here, I kind of start every trade the same. I'm willing to own 100 shares of something. I sell a put against it. Normally 30 to 90 days out is kind of what I like to target. But again, taxes are coming up. So let me go into January. Oh, I'm still looking at Home Depot. Let me go back to DLR. DLR quote. Okay, November. Let's see how January looks. Now, sometimes on these littler, I don't want to call them little because they're not little, but not looked at as much companies, the bid-ask spreads can be very far apart, meaning that what somebody's asking for an option and what somebody who's willing to buy it back for are very far apart. It's like trying to go in and buy a car and the dealership wants $28,000 and you want to spend $20,000. That would be a very far apart bid-ask spread. In this case, I'm looking at the 160 all the way to January, and it's at $5.60 and $5.80. I'm going to start out at $5.75. Again, that's for 1 share. So sell to open a put, obligating me to buy it at $160. I'm sending it in. Now, no bueno. Oh, wait a minute. Excuse me. Spilling coffee everywhere. Okay, this trade's not going to go in. I'm going to adjust my order. Let's bring it back to, I'm going to bring it back to 70. Unfortunately, the bid went to $5.50. $5.50. Now I'm at $5.70. I don't think that's going to go through either. Now, I might have to find a different one. All right. I am not going below $5.60 because I'm a stubborn bastard. Let's see here. There it is. Okay. So let me put the trade in here. I got $560 to write this trade. Okay, the strike was 160. The ticker was DLR. Sold a put, one put, which is 100 shares. And the amount required to back this trade up is 16 grand. Now again, in a retirement account and something, in a retirement account, this would be a good one because it pays a dividend. It's pretty consistent, or it's very consistent. You could go back and look at that. And then those dividends are taxed if it's in a Roth retirement account, which is a sheltered retirement account. But you got to think long term. And this is, in a Roth, you can day trade in a Roth and not pay all those taxes, which is kind of nice. But the dividends are untaxed too. So you could buy it and just forget about it. Let me look at the historical. Now I say forget about it. I check on my things at least quarterly when I'm on a long-term purchase. I don't just forget about it because the stories are always changing, right? This is a trade again because interest rates are getting cut. That will allow DLR to refinance debt at lower rates as well as take advantage of the AI boom. And let me go back. Historical prices. We're going to, dividends only. And let's go 5 years. Okay, so here's what I'm talking about. Back to 20, this is quarterly. It's been paying a dividend. $1.12, $16, $22. It's been $22 for a very long time. Guess what's going to happen? AI boom, interest rate cuts, stock goes up, and then the dividend goes up. That's what I would expect to happen. What actually happens, hard to say, but that's what I'm anticipating. Okay, next one. IWM. Ooh, this is where we get into the goods. So that's essentially a proxy for the Russell 2000. And the thesis behind this, we're cutting interest rates. You have a lot of small business, which is those smaller companies you seldom hear about, but they're out there. They're on an index fund. They're big enough to be part of the Russell 2000. And a lot of those companies are actually struggling with tariffs and a lot of crazy, and it's just a tough go. But they've made it up to that capital level to be included in the Russell. When you start cutting interest rates, that's going to help those companies. Now, I've been hearing about this trade for probably 2 years now, and it really hasn't materialized like I thought it would, but that's because the interest rate cuts have been delayed and delayed and delayed and delayed because inflation has not solved. All right, so let me get into this. Let's look at a 5-year chart. In 5 years, it's up 60%. All right, apparently my internet is not good. It's not pulling up the chart. But 1 year, it's up 13%. So we're not outrageous yet as compared to, say, the Dow, or excuse me, the S&P 500, the NASDAQ. If you pull those up, they've been up a lot more. Now, again, more volatility to this. You're going to have more volatility than the S&P 500. You're going to have more volatility than the NASDAQ 100 because they're smaller companies. So, but I'm comfortable with this trade. Let me look at it. Make sure I'm not running out of money because I will here in a minute. IWM. Boom. Okay, so in this case, I'm just going to see if I can go out a month. Or, I'm going to go out sooner than that. I'm going to write it for, let me look at October 3rd. Okay, I'm going to go 236 is the strike price. All right, so this is actually kind of a small trade requiring, 236 is the strike. What the heck? Okay, there we go, 236, one. I'm going to sell a put, and the cash required would be $23,600. Okay, and the premium I'm anticipating getting is $332, which I'll talk about this in a moment, because the risk reward on this is kind of like, but I'm going to write it anyway. 32, I might not actually get that. Let me go 31. 331, sell to open put. Boom. It went through. Okay. So let me adjust that. Lost $1 there. Okay. So risk reward. This is kind of a, well, let me get the date in there too. So 10/3/25. Ooh, I got to go back and get the date for that. I'll grab it later. So essentially, I'm waiting about 3 weeks on this. to make $331, but I don't want to call it risking. I'm investing $23,600. It's a lot of money to make. It's a lot of money to invest to make just $331. There's probably better trades. Probably the better trade, honestly, would have just been to buy a couple shares to dollar cost average in, and then buy a few more, and then buy a few more if it were to go down at all. I'm kind of going all in and obligating myself to buy 100 shares at 236, and it's currently trading at 239. Wow, I don't know how I feel about this trade. We'll see what it does. So what could happen with this? Let's say leading into the Fed meeting in the next week, things keep running, and then we have a crescendo right when Jerome Powell comes out, and then maybe we back up. So I might actually close this out early to free up capital. We'll see. We'll see. I don't know if I'm going to hold this one to duration because the risk reward on this seems kind of low. But again, if I get 100 shares of this, I'll just turn right around, sell a call for call, and that'll make more option premium. So I believe in the product long term. Let's just put it that way. Long term is in, say, 2 years as we're cutting interest rates to save the job market. All right. And actually, let me go back and get that date since I'm in here. So orders filled. So this was a January trade. So same as this. All right, next up. Wow, here's the little guy trade. Remember GameStop? Remember Wall Street bets and all that crazy? Let's pull up a chart of GameStop. GME, quote. Okay, I actually participated in that nuttiness. Just barely, briefly with options. I don't know, I made $400 or $500. It was a very trivial amount. Only because I got caught up in it all. A lot of people made some serious cheddar on that, but again, if you look at this chart, a lot of people lost a lot of money. Here's what happened, right? Wall Street bets came out. They annihilated. They start buying up shares when it was shorted, and the pros got caught off guard and got obliterated. And so then, of course, it falls apart. And then I'm trying to think of the guy that went up in front of Congress, the guy that started it all, but it shot back up. I don't know if he holds it anymore. I haven't really followed him. Roaring Kitty, that's who it was. But here's why I'm more interested in GameStop now. GameStop is now a Bitcoin proxy company. They bought Bitcoin, and I believe in Bitcoin. And even if their business is trash, Bitcoin is going to give them possibilities that they didn't have before they bought Bitcoin. So let me explain. Let me do a quote of Bitcoin. Okay, so Bitcoin's starting to make a run right now. Wow, is it starting to make a run? That's just the chart today. My next trade's going to be on that. Let me go back. Jesus. So let me look at the 1 year. I'm going to talk more about gold, silver, Bitcoin, and all that in a minute. If you've watched me for any length of time, you know I'm a Bitcoin bull and then some. And these that have bought it, I'm all in. I shouldn't say I'm all in, but I'm watching you. If you've bought in Bitcoin as a company, I'm watching you. It's so, well, I don't want to go into my thesis for Bitcoin yet. Let me just get this trade done. But because GameStop now owns Bitcoin on their balance sheet as Bitcoin goes up, which I'm anticipating at least 200,000 in the next 12 months per crypto coin, that's going to benefit Bitcoin or GameStop. I forget how much they actually purchased, but it's significant. It's, I think, in the top 10 of companies that are doing this in their holdings. And when they double up, people are going to notice. So right now they're kind of on the fray and people haven't really caught on yet. But hey, you know what? Let's do it. And this is what I would call the little guys trade. Let me get in here and do it. So GME is the ticker symbol. Again, same thing, GME. And I'm going to talk about my conservative trade, but we can get aggressive. I'm not going to today because I don't believe in GME that much, but I'm just trying to look for an option trade that makes sense. Give me just 1 second. So I'm looking at the option tables again, and you can see those in your broker. You can see them on Yahoo. Okay, man, want to make at least $100. Let me keep looking. Here we go. No, bid-ask spreads are too far. That's what I'm going to run into. You know what? I'm going to do 2 of them, and that will put me up to $100. Okay, so again, I'm looking October 17th, 10, 17, 25. I'm selling sold puts because I'm going to do 2 of them. And the strike price, you know, if I get stuck with it, whatever. It's such a small trade for me. We're going to say 24. 24. So in this case, since I did 2 option contracts, that's 200 shares. So you got to multiply this by 200, and that obligation is $4,800. That's what I'm doing in this trade. And the premium, we'll see what I get. It's around $1 now, 92 to 95 cents. So I'm going to go 94. We'll do 2 of them. 94, sell to open. Boom. Let's see if it goes through. It did. So there we go. And so I got what, 94.94 times 200 shares or 2 option contracts. I got $188 to write that trade. $188. Okay, again, I think that's about 5% if my math and my on-fly math brain is coming out right. 5% in about a month, 60% annually. I can live with that. And if I get stuck with the shares because I believe in Bitcoin so much, I'm okay with that. So next up. Now, I don't know. We could have another FOMO moment with GameStop. We might have Wall Street Bets come out and make some comments. Who knows what that looks like? I think it was Keith Gills. I think that's Roy Kitty. Anyway, he could come out and say something. We don't know how that's going to turn out. But again, I'm not shorting it. I'm basically saying I'm willing to buy 200 shares of it. All right. Now, let's get into our inflation trades. I've been foot stomping for months on this, and gold and silver and Bitcoin, they've been hitting all-time highs. Now, actually, I've already done this trade, so let me delete that. Let's start out with silver, because that's the poor man's gold. Silver, SLV. This is an index fund that tracks silver, and it has been going up and up. So let's fan out a bit. Here's your 1-year chart. So I was foot stomping in April. If you go back in my videos and look at what's happened. We're up. God, we're up a lot. A lot. On silver, right? Which has been stalled out for like 20 years. But here's the thing about silver. Electric cars need it. And the new generation of batteries is going to need a lot of it. So not only are people collecting it, there's an industrial demand for it that's going to be beyond what people can fathom. And the car companies are going to have to pay up because you're not buying my silver, right? The mining companies they can't pull enough out of the ground because they're not set up to do that right now. And there's a lag time of investment and capital setup and all that. So silver is going to be in demand. I see silver going to 100. I'm just going to say, I see silver going to 100. So that's more than a double. Now, the time frame, it really depends on those electric cars. How long is that battery going to be delayed? I know Toyota was talking about 2026, 2027. Mercedes is already testing them. This is the dry cell chemistry for EVs. But here's why it's going to go off the chart. And the range of those cars are anywhere from 700 to 900 miles. They charge faster. It is the next generation of cars that last forever. Let me just say that. It's the next generation of cars that will last forever. There's no maintenance. As long as the prices are good, it's going to be amazing. I don't have one yet. I have quite a few EVs, but this is game-changing technology if they're able to mass manufacture it. So I'm getting on board before it's too late, to be quite honest, and I'm going to ride that all the way to 100. So I've showed you physical silver. I don't have any in front of me, but I'm a huge silver bull. So anyway, I have so many trades on it already, but I'm going to show you one right now. So silver, this index fund of silver is trading at Now, could silver bump around a little bit? Absolutely. Okay. Could it go down to 36 before it goes up to 40? Yes, it can. So you got to prepare. You got to know your time horizon when you set up any trade. If you're not a long-term investor, what I'm showing you is probably not good. If you're in it for the short term, there's other things you could do and probably make a lot of more money, but you could lose a lot more money too. So you got to know your own time horizon, your risk tolerance. There's so many factors here. I can't tailor this for everybody. All I can do is educate and talk about it. So silver is at 38. 38. Well, imagine that. So I'm going to go into my option table here. Again, I already have so many trades on silver. It's just ridiculous. And right now, 100% of those are profitable. SLV. And I'll give you another example here in a minute of the silver trade. If you don't want to do the index fund, which is honestly the easiest way to do it. Because I don't have to safeguard and store and protect, and silver oxidizes if you just let it out. See, there's things you have to do for humidity. There's just a lot of factors. So, okay, I'm going to go out. This is, I don't know, this is kind of a small trade again, but October 17th is going to be my expiration date. Now, at any time, if you have questions, please chime in. I will answer those. So sold puts. I'm going to say puts because I seldom do a trade that makes less than $100. I'm going to do 5 of them. Strike price. Looking at the option table. I'm looking at the puts. I'm scanning real time. I'm going to say $36.50. That gives me about a $2 cushion. In about a month, a little over a month on this trade. I will have to calculate how much that is in value here of capital needed to perform this trade. So 41 cents to 42 cents a share. I'm just going to start at 42, but we'll see what happens. Okay, 5 contracts, sell to open. So $210 would be the amount I would get. And it went through. So $210. Again, this, in my mind, is a low risk trade, but it depends on who you are. All right, cash required is a lot. It's a lot for this trade. Now, if you wanted to make more over here, you could extend the duration, make the trade, the expiration date out further, but then you have to hold this contract longer. And I'm going to talk about why I like these shorter term time horizons here in a moment. So let me get my calculator. Okay, 3650 times 500 shares, because we wrote 5 contracts. So yeah, quite a bit. I need 18 grand to back up this trade. Boom. Let's see if I've run out of money. Now again, I don't know where my viewers are in life. I can come up with a trade for anyone. I literally can. And you can scale these, right? You could do one contract, which would only be the $3,650 trade. Let me go back. I don't think I'm going to be able to do this gold trade. That's going to obligate me to buy it. So I could buy a couple shares of GLD. Again, these are my inflation trades. If you go to look at gold, here's another one. Oh, before I finish my thought on silver. So Costco sells silver. It's become actually very profitable for them. Let's see. Now, I've showed you these in the past because I've bought them. I don't have it with me right now, but this is what they look like. So I originally started buying these in April. I showed you, now these are the 1 ounce. I don't want that. Liberty. Oh, they're only going to show, we'll see what they show. Yeah, here we go. Okay, so it's a 10-ounce silver bar. 10 ounces of silver. So if silver is at, I don't know, let's see what the trading price of silver is now. JM Bullion. No sponsorship. I've just bought a few things from them over the years. I believe silver is at about $42 a share right now. In the short term, it's going to 50, in my opinion. Yeah, 42.49. So one of these silver bars is worth 10 times this amount, so about $425, and Costco right now has it for $450. So they're trying to make $25 on you, right? And you're paying a little bit for the craftsmanship and whatnot. But if you it's out of stock, that's kind of funny because, you know, maybe I'm not the only one that realizes silver's going up. In any event, that's a way to physically hold it. When Costco sells these and sends them to you, they're kind of sealed in a plastic thingy, vacuum sealed actually, which is nice. That keeps them looking pretty. And I throw them in a safety deposit box and forget about them. When silver hits over 100 an ounce, then maybe I go to a coin shop and try to get as close to spot price as I can and double up on my investment. But I guess the point I'm trying to make, in April I was buying these for $350. Let me just say that again. In April, I was buying these for $350. So for each one of these I bought, I'm up $100. You know, it is what it is. But again, SLV, and I said that way back when, it's just an easier way to do it because it's highly liquid and I can go in and out for fractions less than $1 on my trade, if not free, depending on who you're trading with, where there's a premium on this and you're paying it to Costco. Although if you have a Costco card, I believe you get, 2% cash back or whatever it is. So in any event, there's my silver rant. Boom. Yeah, Bitcoin's running. I need to do my Bitcoin trade before I get too off track because it's flying away. So again, gold is the same category. Gold has stood the test of time for forever, essentially. GLD. Now, gold's a funny one for me. I mentioned in the past, my father bought a couple coins. He's still alive. When I was just a wee little kid. And he bought them for, I believe it was about $180 to $200 a coin for an ounce of silver. So let's just go back to the JM Bullion and see what an ounce of silver costs now. And these were Canadian maple leafs is what he bought, which is a highly popular form of collecting gold. All right. Oh, come on. Let's see. Let me just spot. Oh, there we go. It's up at the top here. Okay. So gold is at $3,662 per ounce. So again, I just mentioned my father picked them up in the 80s for $200 an ounce. So he bought those, threw them in a safety deposit box with some important documents and forgot about them. I don't know what the return on that is, but I'd have to go back and figure out what inflation has been during that time. But gold typically keeps up with inflation. And the reason I keep foot stomping is we are cutting interest rates in a week when we have not solved inflation. But we're going to save the job market. So expect more inflation. I think it's going to be persistent. We're going to roll in the 3 range, 3% annually. I think the true number is higher than that, and we're willing to accept that because we're going to save the job market. But I'll talk more about that later. Okay, so Bitcoin. I keep foot stomping on it over and over. Hopefully people are listening. Bitcoin. All right, so one Bitcoin right now is $116,000. I hate to age myself out, but I remember when it was less than $1. I actually looked at it when it was less than $1. Not my finest moment. I didn't mine it back then. I should have. Had the software set up. Probably the saddest moment of my life now looking at Bitcoin at this price. But if you think this price is ridiculous, wait 5 years. I'm just saying. So Why am I a bull on Bitcoin? Why do I keep foot stomping? And I'm tying it into this I'm sorry, I don't have the right ticker, IBIT. Right now, my largest investment is IBIT. By far. By far. Like, well into the six figures far. And I say that because Bitcoin, is, in my opinion, is going to outpace everything over the long haul. And here's why. The United States has an unlimited credit card. They keep running it. I saw the other day that the tariff money that the president is pulling in, although it is helping our national debt, or I shouldn't say it's helping the debt, it's helping slow down the progress of going into debt. So the best way I can explain it is even with the tariff money coming in, which I believe was $30 billion last month, we went 300 billion. It was 300 billion plus. I think it was like $320 billion in debt for last month. So although we're collecting tariff money, we are spending 10 times that. And the irony of all this is where the market, in my opinion, could just fall apart. If the federal judge overrules the Trump tariffs, I see complete chaos in the stock market. But I tell you what I see Bitcoin ripping, and this 200,000 price that everybody, maybe not initially, because Bitcoin's still a risk on asset occasionally. People freak out and then they see the market start to tip over and they start selling Bitcoin. But then when they come to their senses, Bitcoin typically rips harder, faster, and if the market's up, say the NASDAQ 2%, Bitcoin's up 3 or 4. And then that continues to accelerate as people come to their senses. So that's what I anticipate happening. I'm hoping the federal judge does it. And then the next thing I see happening is, well, okay, if we null and void these tariffs, then we got to pay all that back. The United States doesn't have that money. We've already spent that. We spent that years ago. Like 20 years ago, we spent the money we're collecting today. So this is a problem that wasn't started under President Trump. It wasn't started under Biden. It wasn't started under Obama. It was started when I was a wee child in the 80s. And the United States is going to have a very tough time fixing this. They're going to have to print more money. And not only that, they're going to have to print more money to save Social Security. So I keep foot stomping the three things: gold, silver, Bitcoin. Gold, silver, Bitcoin. Gold, silver, Bitcoin. I have to keep repeating myself. Gold, silver, Bitcoin. Gold, silver, Bitcoin. I hate to sound like a broken record, but gold, silver, Bitcoin. So in any event, IBIT, yeah, it's running. We're starting to recover, right? We had a pullback right after Bitcoin hit all-time highs. Here's where Bitcoin hit. It's been a month. Look at what's happening. And if you think this is going to stop, think again. We're going right back to all-time highs, and we're going to crush right through that. And then the media is going to make a field day of it, and they're going to talk about it, and then we're going to hit into the 140s, and it's like, oh, Bitcoin, it's dead. It's what did Warren Buffett call it? Rat poison squared. I'm sorry. It is not for the time being. As long as it remains secure. That is my concern about Bitcoin, right? I look at risk for every investment that I ever put my money in. I work too damn hard for my money. I don't want to lose it. But what I can tell you, quantum computing to me is the risk for Bitcoin. So smart minds are looking at all that right now, and I'm hopeful that they will fix that. If they do not, you will have me talking about scaling out of Bitcoin, hopefully before that falls apart. So there is very much so risk in Bitcoin and quantum computing. You want it to be secure. You want people that invest in it to be secure. You don't want to hear about BlackRock losing, $1 trillion worth of Bitcoin to some hacker. Now, again, these big firms, they know better. They're putting this stuff off, cold storage is what they call it, basically offline, off the internet. But if it gets hacked in that level and people wake up and their funds are just gone, yes, that's going to be a huge issue, and they will lose confidence in this product and it will go to dog shit, to be quite honest. So hopefully that doesn't happen. But in the shorter to medium term, the United States, again, is broken in a way that I can't even explain in the amount of time I have to do in this video. And that's why Bitcoin, gold, and silver are going up and up and up. Now, if you want to be more conservative, gold or silver. All right, so IBIT, I wrote a trade earlier today. I'm just going to tell you what it was. And this is how much I believe in this. Yeah, I'm pulling it up. And I apologize for the length of this video. It is very long, but I have people all the time, Matt, what are you investing in? How are you doing it? And this is what I'm attempting to do, is explain that to you trade by trade. Let me see, trades, orders, filled, IBIT. I actually did 2 of them, and I'm going to give you both of them. Now, I'm not looking at current prices. You might get a better price if you were to do a trade like this right now. This is something I did a few hours ago. You know, as things move, the secondary option market moves as well, up and down, until you get closer and closer to expiration. But yeah, sold puts. IBIT. Let's see, it expires. This particular trade I wrote further out. 25, 20, and yes, you were reading that correctly. Strike price is 61. Cash required, okay. Calculator. And again, you don't need this type of money to write this trade. You just do less puts. All right, $61 times these 20 contracts, that's 2,000 shares. Yes, you were reading that correctly. That's how much cash you need to write this trade, and how much should I get to write that? $221. I'm sorry, $2.21 times 2,000 shares. Boom. Okay, 4,000. All right. So this trade's 2 months out. I made about $4,500 approximately, rounding up. I needed $122,000 to write that trade, and the current price of IBIT is $66.30. So IBIT or Bitcoin could go down 10% between now and November, and then I would be skirting around the strike price here of 61. If it goes below 61 IBIT, then I will be obligated to buy, yes, 2,000 shares of this. So it is a large trade, but you could scale this back. You could cut this in half by writing 10 of these, or you could cut it even more. If you wrote 1, the profit on this would be potentially $221, and you'd be obligating to buy $6,100. Now, I actually wrote 2 of these, so let me go back and grab my other one. And I keep going back. I did not start here. This one's a little shorter. So 10, 24, 25, IBIT. And I'm putting these in here so we can go back and look at these later and see if they were good or bad. I did 10. Strike price is 62. So that I can do in my head without a calculator. It's 62 grand. And how much? $1.62. Okay. So this trade was 162 and add a 0. And let me add that $sign. Okay, so that's how much I made to write that trade today. Deposit in the account. But again, lots of risk. I say lots of risk. I'll go back. You should always be diversified, right? And in a trade like this, I'm not as diversified as I'd like to be, especially if I get signed these shares. But I have a product that I believe in so much, I'm okay with it. I'm seriously okay with it. So what I'll do with this, a trade like this, okay, because I have overwritten, I would have to raise cash. It's in there in other things, but I would have to sell things. So if the entire market just starts tanking, I'll have to sell things potentially at a loss to cover this trade, or I'll have to buy these back at higher prices and lose money. So I'm hoping none of that happens. But again, because of these Fed rate cuts coming up, we're going to be touching 70 here in a very short amount of time for IBIT, in my opinion. So we'll see how that goes. Trades are down. They're already made, and let's move on. Again, this is a bullish bet on Bitcoin. NVDA. Oh my gosh. This isn't always trade for me. The AI theme is not dead. It's not even close. We're like if it's a baseball game, we're in inning 1. Like seriously. This is the underpinnings of the internet when it first got started. That's what I equate this to. We have so much further to go, and you can't even wrap your mind around what this even looks like. The other day, Apple unveiled AirPods. Yeah, throw them in your ear, and you can live translate with the things. Now, I'll have to get a pair of those because my wife's going abroad, and I think that would help her to find a hotel, to get a taxi, all that type of stuff. But what's in the back of that? That's artificial intelligence making real-time decisions and then spitting out a foreign language, translating it real time. Like, what? That is crazy. If you had seen the technology we had before for that, I remember I was in Italy when I'm in my low 20s, and I had this little digital thing that I would click, and I would try to write English words so that I could get the Italian word, but then I couldn't even pronounce the damn thing, and the Italians would look at me like I was a freaking moron. Yeah, we've come a long ways, and AI is going to power a whole nother generation of technology that I can't even wrap my mind around. This is the Wright brothers in AI. That's where we're headed. So I'm excited about that, but I say all that because NVIDIA, they're just at the forefront of all that, and I have trades always on NVIDIA unless the story changes, which I don't see it happening anytime soon. So what would be a trade on NVIDIA? It is trading around 177 a share right now. Let me pull it up. Okay, NVIDIA. Yeah, if you go back, I had a video where I was like, you will not get my NVIDIA out of my cold, dead hands, right? And I still feel that way. It's just a great company. So NVDA. Let me look at the option table. And again, if you don't have the 17 grand to do a trade like this, I get it. Because I didn't either when I first started doing this. NVIDIA. Okay, let me write it pretty close. I'm going to go out to Halloween. So 10, 31, 25. I'm only doing one because I already have so many. So 1, the strike price on this option table for this put is 165. Now, there's a high likelihood I'm going to have to cough up this money, right? There's only, if you pull up NVIDIA right now, NVDA, we're at 177. So that gives me a $12.80 cushion. But NVIDIA flies around. It gets up, it gets down. We were in the low hundreds earlier this year, and that was painful because I had a lot of it. But, I mean, look at the rally. People come to their senses. They realize, oh, yeah, NVIDIA is literally having mic drop moments every quarter they announce earnings, and China stuff is opening up. The reason it went down, President Trump was targeting them, not specifically them, but trade with China, and they were trying to limit chips to China. But now the government's taking a 15% stake in anything. They're going to take those profits. It's like a fee, a tariff, if you will, for all the chips that NVIDIA sells to China. And China is a huge market. So that actually is going to help our deficit a bit. But that was part of the agreement with NVIDIA, which is really interesting to me. But President Trump's trying to come up with creative ways to save America. And I'm not against it. If anything, if they use that money to beef up cybersecurity for America, I'm all about that. So let's see, cash required for this trade would be $16,500. 16,500. Option premium. What am I going to get? Well, I think I'll get 370. I'm going to start there. 370. $3.70 on the option table. Sell to open. This is split right in the middle of the bid ask. So I'm assuming this is going to go through, and it did. So the option premium is $370. Boom, trade's done. CRWV. Well, actually, let me make sure I got enough money here because I'm going to run out here soon. Balances. Okay, I got a little to play with. Let me look at these trades and see what makes sense. You see AVGO. Oh, this is Broadcom. It's kind of expensive. They're so good though. CRWV VRT. Let's try that. I'm looking for a smaller dollar stock. Gosh dang, we're busting in the highs again. I hate writing these trades at all-time highs. Okay, I'm gonna do this one. So, what is this company? Let me go in here. Power is a huge issue for AI. How do we get enough power? Because these chips are power hungry in a way that a data center, they just require a lot of power. So, profile. Okay, I'm sorry. They're also doing data centers, computer networks, commercial and industrial environments. Looks globally. AC to DC power management products. There you go. Switch gear. Now, what you don't know about me is my former career with cybersecurity. I gave that up to become a full-time stock and option trader. I basically said way back when, if I can make more money doing this, then that's what I'm going to do, and so I gave that up. No, I say all that, and all my peers are working from home because of COVID, so, did I make the right decision? I don't know. I typically enjoy doing this. It can get stressful when you overwrite trades and the market crashes the way I'm showing you right now, but I don't know. I'm a persistent bugger. So essentially this is what they do. They're in the thick of it. This is kind of an AI trade, and yeah, they've been crushing it as well. So I'm going to go ahead and write this trade. Let me look at the option table. So VRT. So if you're just tuning in, what I would like to see is what stocks you're trading. I'm always looking at new ideas. This is partially why I include the CNBC for the last 20 years. Commentators, professionals, they come out, they give their opinion, and then I weed through what they're spinning and decide, okay, is that a trade for me? This is one of those. So I'm looking at the option table. I'm going to try to go out a month. October 17th. Yeah. Well, this is a small trade. This is small. Risk reward small. I'm going to write it anyway. Sold. 1. I'm just looking at the strike on the option table is 120. So you need $12,000 to write this trade, and I'm only anticipating getting a little over $2.40. Let's see how it goes. So I'm selling to open. I'm doing a limit order of $2.43. Away it goes. It went through. Okay. Now, if I was patient, I could write my limits higher and then just kind of wait throughout the day and see which ones I own, option contracts that I own. But since I'm doing live trading, I want these things to ding away. Let's see, 43. Oop. Sorry, 243. Okay. So essentially, on the option table, that's $2.43 per share. I'm just in my math multiplying by 100 because I sold one of them, which is 100 shares, and that's how I come up with that number. Delete. So I think at this point I probably have a trade for everybody. I got this little guy trade, which, I mean, GameStop again, I'm not sure if that was my only trade. It just depends on your time horizon, how much you believe in things. But I think it's a trade that'll be profitable. So we'll go back and see later. I gotta write this one. Tell me I got enough money to write this. CRWV. If you're unfamiliar with CRWV, data centers, are very, what's the word I'm looking for? There's a lot that goes into a data center. You have to, I used to, I don't want to say design them, but I maintained them, and I had to deal with a lot of issues on poor design initially that I had to go back and fix. So what do data centers need? Well, they need lots of electricity. You have to account for that early. You need huge circuit breakers. You need all that copper running through, plenty of electricity. You need backup systems. So normally you start out with a battery that initially kicks to that, and then eventually a diesel generator if that runs out. You need adequate cooling. That is huge. So HVAC. I could come up with trades in that arena that would help support this. You need proper lighting. You need adequate rack space. You need the access behind the racks, all that cabling. Then when you get to the server level, you need that hardware, and then you have what's called bare metal servers, but then you layer software on top of that so that you can maximize your investment and use your processors and your memory and all that. Anyway, what I'm trying to say is the average Joe doesn't go in and set up a data center. There's a skill set that's needed, and so this company, let me pull up CRWV. Is actually relatively new. I think it was only a couple months ago that they were released to the New York Stock Exchange. So they started in the 50s. They had a mad run almost to 200. They backed up to the low hundreds. We're in the discovery phase because it's such a new company. So at what price would you want to get something like this? I have no idea. We have not hardened in our discovery of what price for this company should be. So it's going to be highly volatile is what I'm trying to tell you. So I wrote a trade one like I'm going to show you when it was in the 130 range, and then it backed up to 100, and I'm like, man, actually I wrote two of them, $24,000 I think it was. And I was like, man, that was the wrong trade. But then there was some news the other day, and it spiked up 20%. It's going to be a wild ride. And the other thing is they're buying all these chips from NVDA to support the AI revolution. So let's kind of take a look at what CRWV's doing. But NVIDIA and Jensen Huang seems to have taken an interest in this company because they're buying a lot of their hardware. So they're supporting them. They're giving them kind of first dibs on stuff. But my understanding of what CRWV's doing before I get into the description is, I'll just pull it up. Research community stats profile. There we go. They are allowing companies that can't afford that investment to build a data center and all the AI hardware and all the expense of that. They're leasing time so that they can work on their AI projects, because you need monster graphic GPUs to support all that. Monster. So it's almost like the AWS of Amazon. Amazon Web Services is honestly what saved Amazon. Amazon doesn't make a lot of money, to be quite honest. They have it for like 30 years. It's expensive to bring packages to your front door. So when AWS came out, in my opinion, that saved Amazon. It saved them. You know, they've done a lot of other things. They do these long shot investments of time and energy and engineering, and they come up with home runs occasionally. But AWS is their home run. It's the reason Amazon is even profitable. And this is that for AI without the drag of delivering you a package. So there is a lot of risk though, because NVIDIA charges a lot for these GPUs, like crazy amounts, right? So CRWV has come up with a business model where they ink the contracts first with their AI customers. They get them to kind of do that initial investment under contract so that they have the money to buy the GPUs. But these GPUs are going to be trash in a couple of years because NVIDIA is going to come up with new ones. So what CRWV does with these old GPUs in these data centers, can they sell them off to China? You're in a realm where the depreciation of your assets is huge and fast because this technology is going to keep rolling and rolling and rolling. If you know anything about depreciation, if you bought a Nissan Leaf 12 years ago, you realize what I'm talking about. That car was $36,000 when it came out, and my daughter's driving one now, and it's about $3,000. So 90% depreciation. That's what we're talking about with the billions of dollars that CRWV is spending on NVIDIA chips. So, but they seem to have an interesting model. So I don't know. Time will tell if they're successful, but as a short-term trade, I'm okay with it. So anyway, let me go back to it. And the reason I'm okay with it, the option premiums are higher than some of the other stuff that I've showed you. So CRWV. CRWV. Wow, we're going a long time on this one, but there's some good information in here. There's something for everyone. So CRWV. What are we looking at here? Okay, we're actually slightly down today, which is interesting. I'm going to do a short-term one, October 17th again. Well, I say that, and let me look at the option table. Okay, again, what I'm looking for is very tight bid-ask spreads when I'm scanning the option table. I don't want to do a market order and get screwed on price discovery between the bid-ask spreads. So let me see if there's so there's a 30-cent bid-ask spread, 25 cents, 35 cents. Wow, this might not be the price discovery I'm looking for. 25 cents. Let me see if there's another expiration date that makes more sense. 25 cents, 45 cents. Jesus. Okay, well, what that tells me is there's not enough people trading options to get really good price discovery. So I'm looking at stuff that expires today, a week out. I'm scanning. This one might work. This one might work. Okay, let me go one more week out. I might actually write this. So right now I'm looking at the 1 week out chart. Let me do 2 weeks out. See if that looks better. 4:106. Okay, I'm going to do this one. I'm going to do 2 weeks out. Let me change this. So 2 weeks out would be the 26th of September. So 9/26/25. Okay, what I'm looking at is a strike price. Man, even in the amount of time that I've talked, the price discovery shifted. Yeah, this stuff moves. I'm going to go 106. It's a 20-cent bid-ask spread. So again, this would be, if this goes through, I need this, $10,600. And the amount of money I'm going to get to write this trade is, I'm going to go 420. No reference to marijuana. 420. And I'm going to mark it red because I have not yet done the trade. So, okay. So sell to open. Yeah, actually, it's probably going to go through because it's already changed in my favor. You know what? I'm going to go 430. I'm going to do a limit order and just leave it out there and see what happens. So sell, boom. Yes. Okay. I'm just going to leave that out there. And if you hear the phone ding off, that's probably what that is. I'll go back and check. Speaking of 420, let's talk about Tesla. It's not even on my list right now. Tesla's starting to make a mad run right now. They've gone up 13% in 2 days. So you got to wonder, okay, what's going on here? I used to have a lot of Tesla. I do, man, this run. Jesus. Yeah, 5-day chart. Yeah, we're up 12% in 5 days. So what's going on with Tesla? Well, I can tell you everything that I see is bad other than a couple of things. So it's funny to me to see it run. But in the short term, they're killing the $7,500 EV tax credit. And they, I believe, are also killing the energy credits that Tesla gets to sell cars, to sell clean cars versus the other companies that don't, that have to buy credits from Tesla. Both of those are going away. And you have an aging model, other than the Cybertruck, but that seems to be a flop, and that has to do with quality control issues, not delivering what they originally promised, and Elon's crazy. The Model 3 looks a bit stale, although it's been refreshed. The Model S, for God's sake, been out forever. 2011 I think is when that came. Yeah, and they've refreshed it. It's probably one of the best cars you can buy, to be honest, if you want something that lasts forever. But they're still expensive. And when that $7,500 tax credit goes away, the cars are going to become more expensive. But what I will say is everyone else that's in this field is going to suffer, and they're going to suffer more. But Tesla's going to suffer too. So what I'm hoping is that battery technology that I was talking, that breakthrough, the solid state batteries, when they can double up the car mileage, where your range is 600 to 900 miles, the charging infrastructure at that point is a non-issue. It just is, especially if it charges faster than the current car. So that type of breakthrough would allow Tesla to become the dominant player, with the exception of China. So Tesla's in a lot of other things. So if they were able to get the full self-driving, which I don't think they will, because they got rid of the sensors, the not LiDAR, but the other sensors. Cameras can't see through weather. That's why there's a driver or a passenger in these robo-taxis. That's not going away. But the full self-driving is good. It's better than most that don't have LiDAR. So I'm so torn on Tesla. I love Elon's crazy. I love his cars. I would buy another one. But as far as a stock, it's pumping right now because people are eating up their inventory before the tax credit goes away. Full stop. Their next sales number is going to look amazing, and then it's going to fall off a cliff, in my opinion, unless he can spin the narrative on another story that just shocks the world. So, I don't know. Elon is the master of timing and being able to spin either new products or new ideas, and people get excited about it, and there's a cult following. So anyway, where do I see Tesla going? 420. That seems to be the marijuana funny, mean number. 420 is where it's going. It just is. So for really no reason. That's why it's pumping. Part of this is short seller covering, which, funny enough, I think I have some calls that are shorted at 420. So I'm starting to get a little antsy in my pants. But could it keep running? Yeah, it absolutely could, because the tax credit ends at the end of the month. So we'll see how high it goes before it backs off. But longer term, I want to see those robots in Tesla's factories making their cars, doing things that people couldn't have dreamed being possible, and eliminating jobs, I hate to say. If I see that in large scale, then I am very bullish on Tesla, because they'll sell every one they make to every company on a global scale, and that is very exciting, especially if it's software as a subscription model. The full self-driving thing, I just don't think they're going to get done with the sensors they have on the car. That's my humble opinion. So, yeah, but car's amazing. I have one bought a couple years ago, 60,000 miles, got the LFP battery, and it's amazing. So, in any event, that's my Tesla rant, since we were talking about 420. So let me get back on track. But I have sold some puts against Tesla. I do not own any shares, and I have a couple undercover calls that's very concerning. So I'm keeping a close eye on it. That's why I bring it all up. Okay, Microsoft. I wanted to do a video a couple days ago. I didn't have time. Microsoft was trading just shy of 500, and that was going to be my buy in my video. And so at that point, I did sell puts. I'm going to pull one of them up right now. I think I sold some yesterday before it went up. Let me actually pull up the chart. Microsoft long term, they're going to be a huge beneficiary of AI. I would expect a stock split to announce down the road that'll pump the shares. They pay a dividend. It's kind of a conservative play, but they're gonna make a lot of money with AI, and the world doesn't understand how they're gonna do it yet. But trust me when I say they will. Microsoft. And here's the other thing that people don't realize. AI is going to allow them to scale down their workforce, and they pay their employees very well. I got a couple friends that work for them. And so I hate to say pink slips are going to continue to go out over time. And that's going to help their bottom line even further. So let me go back to summary. And let's look at, I don't know, a 1 year chart. Okay. So this is why I was going to mention Microsoft. We kind of went down. We're popping kind of hard, right? We got to the 495 range. I honestly thought that was bottoming out, and I was going to make the video a couple days ago when it was 500, but it is what it is. I'm mentioning it now. I think it has upside, and it's going to retest the high, especially when earnings come out, and that's what might drive it even further higher. So now here's the thing. I've talked about PE before. It's the price of a stock divided by the earnings. That's how you get this number. So you take this price and you divide it by how much money they make annually. So if the annual income per share goes up, this number gets this 37.49 gets lower and lower. And at that point, if you have a growing company, the lower that number, the better value you're getting. So high growth companies, over time, that if the stock price stays sideways, right, it keeps trading sideways. If they keep making more and more money, that number goes down and down until it shows up on the scanners of the professionals. And then they come out and say, oh, this company is great and you should buy it. So Microsoft's one of those companies. That number is going to keep going down, which is going to drive this stock price up over time, over the long term. And because they're a well-established company, you're able to collect a dividend while you wait for that all to happen. Not very much though. $3 a year, $3.30. But that dividend's going up too. So let's take a look at two things. I don't think I have enough money in my account right now to do this trade, but hey, you know what? Maybe I just buy a couple shares. That's easy enough. Let me go. Hang on, my app is locked up. I'm having to log back. That CRWV trade, I don't think I've heard the ding. Let me go back and look at my open orders here. Yeah, I'm really interested to see if people watch this later, have questions, comments, all that good stuff. No, it's still out there. I'm going to adjust my limit order. Oh my gosh, it's gone down a lot. Let me try 410. $4.10 a share, selling it. That is not the ding I want. That just means I adjusted my order. Okay, let's try 405. I really want this trade to go through. Okay, $4 is my lowest. I'm not going lower than that. Sometimes they don't work out. So what somebody's trying to get out of me, they're willing to pay me $385. I'm willing to go $400. See if it goes through. No. All right, I'm going to cancel this and find another one that makes more sense. Cancel. Yes. There's only 30 more minutes in the trading session. I'm pulling up CRWV. Let me go back to my chart to remember the ticker. CRWV. If you're just tuning in, I'm showing you some stock and option trades that I'm actually doing. CRWV is flat for the day right now. I'm going to go out October 10th, I believe. Wow. No, I can't go out October 10th. The big ass spreads are terrible. This is kind of bad too. Man, this trade might not work. I'm scanning. I'm looking for tight bid-ask spreads. Something that's very close on a shorter term option, selling a put. And okay. I think I can make this one work. Okay, so I'm looking at the 104 strike. $104 commitment for me to buy 100 shares, September 26th. So let me, oh, okay, it's the same expiration date. Yay. I'm scanning. 106. There is a 20-cent spread. I'm going to try to split the difference. So in this case, that is $3.75 a share. Sell to open put. Good to cancel. Oh, you cheap bastard. Come on. All right, trying. I'm going to lower it a nickel. Maybe. We'll see. I'm running out of coffee here, so we're going to have to shut this down. Is it going to go through? So normally when I split the difference like that, and normally somebody picks up on it and the trade goes through. Okay, I did. So let me make sure I got all the details. So I didn't get I changed my limit order and made it lower. And so I got less money to write that trade. So 375. And that's no longer red. That's a real trade. Done. Okay, so at this point, I've showed you all these trades. Wow. Okay. Well, this is aggressive because of these IBIT trades. But again, I sleep well at night knowing Bitcoin is going to thrive on. But it might not. And if I'm wrong, I'm going to pay the price. Let me tell you. It's going to be ugly. So, but I don't believe I am. So, because America's crazy and we like to spend money. That's why. Period. Full stop. Okay, so here's the deal. All those option premiums that I've showed you up to this point, if you've stuck around, you need a gold star. I want to give you a hug because you're amazing. You need to like and subscribe if you're still hearing me out. But that's $9,240 worth of trades. Okay, that amount of money is going into the account. It's already in the account. So I could invest that into something right now. I could spend that money on something. Or I could write another option trade because I have an extra $9,240 in the account. That's yours. Buy a car, buy a TV, buy whatever you want. Now, I say that, I reinvest. That's kind of what I do, and that's why I'm able to show you these type of trades because I've been reinvesting since I was a wee little baby. But yeah, it's a decent amount. Now, the problem with that is, look how much money you need to write what I just showed you. Yeah, that's real. That's a real big number. So, but you do not have to wait for expiration for this to expire out. Not necessary. You can close these out early. So if the market keeps pumping and I need to free up some capital, I might need a little of this option premium to buy this stuff back, hopefully at a profit. And that's what I was saying with these IBITs because I went so hard on these, right? That's a 3,000 share commitment right there. For one thing. 3,000 shares, that's a lot. It's something that's trading at $61 to $62 a share. I might buy these back, and if Bitcoin rips, I might buy all this back for 1,000 and make the difference, right? It just depends. Now, there's something before I go into the next trade, let me see if I even have money to do another trade. Well, I can write another. Let me do one more trade. Please stay to the end if you're with me at this point because I'm going to show you something that will blow your mind. I want to give you that golden nugget because this is the learning that you would need if you have not done options. Okay, AVGO. Okay, so this is Broadcom. That's a $300 a share stock. It falls right in there with NVDA. They're both great companies. They're at the forefront of AI. But I do not have enough money to write this trade. I don't have enough money to write either one of these trades either. Okay, so I always have SP 500, S&P, SPY, and QQQ. I always Always have an open trade for these. Always. Because if I'm stuck buying 100 shares, so what? The money's in the account. I don't care. I hold them until I'm profitable on those. Occasionally I sell higher covered calls, and it almost generates a form of a dividend for me in these option premiums. But I always have trades on these. You know what? I'm going to highlight the ones I just always have trades. Always. I don't always have gold and silver trades, but because of the inflation, I always do right now until I see a change. Wow, I'm hesitating on Verizon. I normally have a trade on Verizon only because of the dividend. Until it gets up to about 50, I'll keep doing that unless the story changes. Okay, out of what I have right here. Oh, I'm sorry, NVIDIA and Microsoft. Yeah, I always have trades on these for as long as I can remember. NVIDIA is kind of a newcomer for me in the last like 5 years, but everything else on there, I can't say it. Verizon, it's on the edge. I'm taking it out. I normally have a trade on Verizon, but I play that one. So there's a range. Verizon's kind of a sleeper. It stays within the, 40 to 45 range. Eventually, over time, it'll get up to the 45 to 50 range. It's just an easy one to make. I'm putting it back on there. It's an easy one for me to make money. Because if I get assigned the shares, then I collect the high dividend. What would crush Verizon? If they came out one day and said, you know what? We're not making enough money. You know what? Wow, I got so many things going on in my mind. Let me break this down. Verizon has crazy debt. A lot of debt. To build out their infrastructure and to provide that phone support that they give everyone, they have to spend and spend and spend. And every time we upgrade to 5G or whatever the next thing is, 6G, they have to spend. Their model is never done. They have to constantly spend. And so they have a lot of debt. And they still pay a dividend. But the idea is, hey, let's grow our customer base. Let's provide a reliable service that everyone wants. It's a necessity thing, right? Everybody needs a cell phone. My 12-year-old has a cell phone. Everybody needs one to do whatever they're doing in their life. I don't know anyone that doesn't have a cell phone. So the decision is AT&T, Verizon, T-Mobile, or which I actually think is a better company than Verizon, but their share price is higher, and I trade options. That's why I'm recommending Verizon. It's just easier to trade options around. But in any event, you only have a few choices, and so I never see these companies going away. Potentially the smaller ones getting swallowed up. I see that, so there could be a potential investment there, but I just don't track all the smaller ones. In any event, it's just an easy one to make money. So yeah, I'm gonna leave that on there. But yeah, green for me is good. I always have trades going on. And if I'm assigned those shares selling an option put, then I keep those shares until I'm profitable. I just don't let go of them. I keep them. I collect the dividend if it has one. I sell covered calls if I need to. Yeah. Silver, though, right now is like a short-term one. And when I say short-term for me, that's probably a couple of years. Only because it's another one that's a low share price and I can trade options around it and make just lots of money. So, yeah, it's just kind of interesting. Anyway, let me get back on track and close this out. I have a little bit that I can still trade with. Just a little bit. Where's VRT? I don't remember if I made that trade or not. Yeah, I did. So apparently I have one. I just don't have the date. Let me see if I can find something that's not on this list. Okay, I'm going to just read off some of the tickers that I trade around, that I have shares in. So Costco, COST, CrowdStrike. Oh, CrowdStrike. I don't have that on my list. Wow, how do I not have that on my list? Okay, CrowdStrike was in the low, like 410 range, and I started writing puts against it. I think that could get up to 500 quite easily. It's at 436 a share right now. So that's CRWD. CRWV, we've already done that trade. Digital Realty, DLR, GLD. I just opened up the GameStop GME trade, which I normally don't trade GameStop, but again, they own Bitcoin, so I think they'll be all right. Home Depot, we did that trade. IWM, did I do that? Yeah, I did. McDonald's. Okay, McDonald's. I can't talk about a trade against it yet, but I want to at least pull it up because it is on my radar. MCD. Okay. So McDonald's has a trading range, and when it starts pulling below 300, then I look at it and I'm like, maybe I should bite. I let it drop into this, I don't know, 285 to 295 range, and then I sell puts against it, or I buy shares, and then I wait because it pays a dividend. I know McDonald's isn't going away because people aren't done having kids, so there aren't a lot of good, quick options for kids in America. And so if you're thinking about starting a company, that's where I would focus personally. Because McDonald's does exactly that. And because of that, I don't see them going away. People have to work harder, longer to pay their bills because of inflation. And they don't have the budget to buy quality. Not to say McDonald's is equality. They don't have the budget to pay quality food because it's a rat race. I need something right now to eat, and McDonald's does that. So in any event, I'm a long-term trader of McDonald's. I don't plus down hard. I don't believe in it like I do IBIT or some of the other stuff. But it's a trade for me, and I seldom lose money in that trade. But I'm not opening that up yet. I'm watching it. What else? Okay, SPY, Tesla. Man, Tesla's up mad today. They're up another 7% off of what 5-6% yesterday. XLV. Healthcare has been out of favor. When let me go back. I don't even know if I have a trade against it. That CEO that got shot, United Healthcare. Okay, that stock tanked until Warren Buffett took a stake in it. And healthcare in general has just been a kind of a bummer. And these sectors, when they go idle for an extended period of time, it doesn't last forever. And they'll eventually come back in favor. I don't know when that's going to be. But XLV is kind of a blended index fund that tracks all of it. I say all of it, but I mean, it's very specific for healthcare. You know, there's another one for utilities that have traded in the past, XLU. Oh, financials. Here's a good trade. I'm going to do it right now. Regional banks. Let's talk about regional banks. They have been the underdogs to the JP Morgans of this world, the Bank of Americas, right? When you got the government coming in and saving Bank of America or any of these large banks, they just have been the dominant players for so long, and that's about ready to get flipped upside down on its head. We have stable coins coming out, and that levels the playing field for big banks and small banks. These little regional banks, the ones that should be supporting mom and pop projects and small business, they have been struggling for a very long time, and that's about to change. So one of the ones I did recently was KeyBank. The ticker, I just got to find it really quick. I think it was KEY. Again, I don't normally trade this, but there is a huge bull case for the regional banks right now. Yeah, it is KEY. It's at $19.10. I'm just going to put it down and do a trade right now. KEY. This would be, I don't even want to call it an inflation trade. This is a crypto trade, to be honest, for a regional bank, which seems extremely absurd, but that's what it is. Okay, sold, and I'll explain why here. So it's just Key. Yeah, this is a small trade for a small trader. If you're trying to build a brand new account, this would be a great way to do it. Now, you're not diversified because it's a single stock, right? Key Bank, the CEO could die or get shot, or, I don't know, the corporate building burns down. I have no idea what the future holds for Key Bank, but regional banks in general are going to do well. So, no, that's not the strike price. I'm going to write it extremely tight. We're going to maximize this. So this would be a $1,900 trade. And let me look at the option tables. KEY. Ooh, wow. Okay, and this is my last trade because I'm going to have to close some stuff out here in a sec. You know what? I can't write it on this account. What else do I got going? Okay. Option table. I'm going to write it extremely close. October. Okay, no, that's not going to work. I'm looking for close bid-ask spreads on the puts. You know what? I'm going to do this one. And I'm going to write two of them. So October 17th. So this is 10, 17, 25. And then I'm going to write two of them, so that would be $3,800 is required, but you could just write one. But this is not going to make you a millionaire. But, I'm sorry, the premium needed is that. And I'm getting, 58 cents a share approximately, maybe 57. I'm going to start at 58, sell to open two of them. And then I am going to have to let you go for now. Okay, it went through. All right, so, and I got 58 plus 58 is, 116. I got $116 to do this, and yeah, trade's done. Okay, so small regional banks. The reason regional banks are going to do well, these stable coins are going to allow the transfer of money and the issuing of money by how can I put it? Borderless transactions through stable coins backed by assets. And any bank's going to be able to do it, but it allows these banks to play on a level playing field with the big players, which opens up there's another way to play it if you do not want to own an individual company or bank. And the ticker is, I just got to find it really quick. Oh my gosh. Where are you? It's basically a blended one with a bunch of different banks. Must be on a different account. Let me find it before I let you go. Okay, KRE. That's another one. On September, I'm just going to put it on here since I'm talking about it. I wrote this on a few days ago. I'll have to look at the date, but the ticker's KRE. I did 4. The strike price is 64. Calculate this out here. Calc. All right. So 64 times 400. Okay, so $25,000 trade. What was that? My calculator disappeared. How much? 25,600. Yeah, rather large trade. And I got 126 times 4. Man. Okay, 126, 1.26 times. I did 4 contracts, which is 400 shares, and I made $504 to write that trade. Now, I wrote this a couple days ago, and this is a good example. I could close this out right now and make about $90, and it's only been open a couple days. So you don't have to hold these to duration. It's not required. So I tell you what, there's only 10 minutes left in the trading session. I'm going to close this out. I'm hoping there's some questions, comments. I'd love to hear what you're trading and why. And possibly I'll use one of those trades in my live feed I'll shoot for next Friday. We'll see how it goes. My schedule's crazy, but hopefully that's helpful. If you're confused on the options stuff, please ask the questions. If you don't have this type of cheddar to back up the trades, just sprinkling in a share or two of some of these things. I think long term you'll be happy you did. But again, I'm not a professional. I'm not recommending any of these. I'm merely showing how I trade, and these are some of my